Thank you so much for joining me on the line, Graham. And I'd first like to start off with getting a sense of how the operating environment in the second half of the year impacted your business.
Well, thank you very much. Yeah. Look, if you look at our year-on-year results, they don't look half as good as what they were last year, unfortunately, mainly due to a number of factors. The first one being the trade war that is ongoing between America and the U.S. and China, sorry. And obviously, if you haven't heard, India is also the largest importer of CPO in the world, and they recently increased the import duties, which also impacted negatively on world prices. And locally, the problems that we've been having since January, more or less, with a large amount of illegal importation of crude palm oil and especially olein. It has flooded the markets here and has really put a damper on sales for us. So we've been battling with that, and we've been very, very closely talking to government to see how we can minimize this problem. Those are the main areas of concern for us for this year, and that you can see it has impacted on our bottom line.
Yeah, now let's get into the bottom line. Looking at that, we're seeing the profit after tax is down about 57%. Revenues also dipping, and then I'd like to get a sense of, what to expect from these numbers going forward into the next quarter.
Well, if all things stay equal, I don't think that we're going to see much improvement in the prices. I'm talking about the CPO price going forward. And I'm hoping it will not get worse. Today, again, I see that China is threatening retaliation against the U.S. if they put on any more tariffs. That's not good for our business. Unfortunately, the commodities get hit pretty hard. Also, if we are unable to remove this logjam of illegal imports that are coming in, mainly through Benin Republic, but also through Cameroon, it's also going to impact negatively on our ability to sell our product locally. And of course, a lot of the product that's coming in is highly subsidized, and it's creating a major problem for us because we cannot compete with those prices. So it is something that going forward we need to seriously address with governments and see how we can minimize it, as I said earlier. If we don't, we're going to have to really revisit where we're going. And you can see what it does to our bottom line, and it's not good. We haven't got to the point yet where we have to start looking at areas such as retrenchments and that kind of thing. But it may certainly be on the cards if we cannot arrest the situation going forward.
All right then, but looking at the performance in the last quarter, though, were there any upsides?
The upsides, basically, you can see we have, I think, got pretty good control of our costs. Our financing costs are down, and our general costs we've managed to keep within inflation, if not better. So yeah, those are the areas that we have concentrated on. Having said that, it's a little bit difficult for us to keep trimming costs, and most of the costs now that are left are fixed costs, so they're very difficult to change. One of the bright sides on the horizon is obviously we can increase our volume, and by January we should start seeing around 70,000 tons of new crop coming through on our extension 2. That's the first crop that's starting to mature. So that'll increase our production going forward, and so thereafter for the next 2 or 3 years we'll be picking up eventually all of the 9,000 hectares that we've planted there. So that is the good news. So hopefully our fixed costs, our unit costs will drop in that regard as we increase our volumes.
All right, because I was just going to get into your volumes there, and also I'd like to also understand the volumes so far, and also the FX liquidity in the Nigerian market and how that is impacting your business as well.
Well, our volumes, as I said, right now are pretty stable. We're going according to budget, so that's not a problem for us. And going forward, we hope, as I said earlier, to see that increase coming in with the new plantings. In terms of the Forex market at the moment, it is impacting on us pretty much in terms of the if you look at the Forex market at the moment, it's still difficult, not easy to get Forex. And secondly, it's not easy to get your money if you're wanting to pay for letters of credit. Despite the fact that we're on the list of so-called 41 items where nobody is permitted to get Forex through the central bank if they are wishing to purchase crude palm oil for importation, it's not difficult, because the black market rate is actually sometimes better than the official rate, thereby nullifying that effect, because you can basically then go ahead and use your own funding, and you don't even have to get the cost of the letter of credit involved. So that actually removes any inhibition that one might have from importers, because at the moment it's just basically the official market and the black market are virtually at parity. So that has become a non-event for us.
Okay.
Going forward, the Forexes, we do get it, but it's in batches.
All right, then. Interesting, you mentioned earlier about the smuggling activity, and what comes to mind is, we just signed up to the African Continental Free Trade Agreement for that's Nigeria, and then I'm trying to understand, the impact on players like yours, people who play in that space that you occupy, and when you look at you also mentioned challenges you're having about getting your letters of credit, and it also brings to mind the trade procedures. First, what do you think the impact is going to be, the AFCFTA, on your market, and also how can we streamline these trade procedures?
Well, I must tell you that we as an industry were against the AFCFTA, because we felt that even right now, where we have preferential trade agreements through ECOWAS, we cannot stop with 13 or so countries working in that under that regime all of the illegal imports. Now you can imagine when there's another 50-odd countries coming in at you, we found it very difficult to be able to see how we in Nigeria would be able to control that huge amount. Secondly, we also feel that there's not a level playing field. We have a lot of internal inhibitions and problems that create a false economy for us, and that makes it very much more difficult for us to compete. We in fact, through our Manufacturers Association, put up our desire not to be included in it. Unfortunately, it's not the case, and obviously we're still yet to see what the implications are on our business. I think it's going to be a pretty interesting one, and we'll have to see how we are going to do it moving forward. So it could be yet another area of concern for us going forward.
All right, they're very interesting concerns you mentioned there, Graham.